Hello, this is Kieran from Crypto Boost, and today we're going to talk about Bollinger Bands. So a Bollinger Band is a technical analysis tool defined by a set of lines plotted to standard deviations away from a simple moving average SMA of the securities price or cryptocurrency price, since we're looking at cryptocurrencies. So here you've got a chart with some Bollinger Bands as you can see them. And as you can see, there's a top band and a bottom band and a line in the middle, which is a simple moving average. On the chart depicted below, Bollinger Bands bracket the 20-day simple moving average of the stock with an upper and lower band along with the daily movements of the stock price. Because standard deviation is a measure of volatility, when the markets become more volatile, the bands widen. During less volatile periods, the bands contract. So some key takeaways. Bollinger Bands are a technical analysis tool developed by John Bollinger. There are 3 lines that compose the Bollinger Bands: a simple moving average, middle band, and an upper and lower band. The upper and lower bands are typically 2 standard deviations plus minus from a 20-day simple moving average, but can be modified. So we'll talk about how we can trade using the Bollinger Bands and quick look at how it's calculated. First of all, how it is calculated. We've got the middle band, which is the 20-day simple moving average. Basically, this means that you take the average of the 20 last candles and you calculate that for each point. So today you would calculate based on the time period that you're using. So you could use it on a 5-minute, 10-minute, 1-hour time period, and you will look at the last 20 candles and calculate the average. The upper band is a 20-day simple moving average plus a 20-day standard deviation of the price times 2, and the lower band is a 20-day simple moving average minus the 20-day standard deviation of price. So the standard deviation of price means how far the price moves away from the simple moving average. The 5 main signals in the Bollinger Band strategy are based on approaching price action. So this is very important, since these signals, they tell us a lot about what will happen with the price, if it's going to go up, if it's going to continue to rise, or if it's going to go down, and so on. So the first is Constriction, Bullish Expansion, Bearish Expansion, Bullish Move Up, and Bearish Move Down. Approaching action based on both bands. So what is very important is you have to look at both bands to get clues of what is going to happen next. Table of contents. We just looked at that. That's the different signals. First of all, constriction. The bands constrict when there's a decrease in volatility, unless the average daily range decreases. They will not constrict anymore. It is important to look at what the bands will do next in order to decide if you want to enter a new position or exit. However, one thing that you know is as soon as the bands constrict, especially on higher time frames, then an explosive move will happen, and you have to be prepared for a move up or a move down. Bullish expansion. Price is going to walk along the upper band, and what is critical for the bullish expansion is that the lower band is expanding in the opposite direction. So when the upper band is moving up, the lower band moves in the opposite direction down. An important aspect with the bullish expansion is that when the lower band moves down, as soon as it curves back up, then the bullish move is probably finished and it will move into a more sideways pattern and a bit of a correction. And an important point is that the sharper the move up with the upper band, then the sharper the price will rise. Now, since we've got a bullish expansion, we're also going to have a bearish expansion, and it is basically the same thing. However, the price in this case walks along the lower band, with the upper band moving in the opposite direction. As soon as the upper band, in this case, stops moving upwards and starts turning down, then you can maybe expect a bit of a reversal. Bullish move up. Now, contrary to the expansion, the bullish move up, both bands move upwards. Now, the difference with this one is that the move will be less explosive and it's a bit more difficult to capitalize on a bullish move up. Bearish move down, the same as the bullish move up, just another direction. And in this case, you have a much slower descent and decrease in price. That was it for the Bollinger Bands. Right before I go, maybe it might be useful to use that on TradingView. Here we've got the BTC USD chart, and I'll quickly show you how you can add the Bollinger Bands to your chart. So I load a new chart layout. Since this one I need, we'll take this unnamed chart layout, and as soon as it loads, we can. Oh, let's close this. It would be nice if it loaded a bit faster, but never mind. Here we've got our indicators, and we can select here Bollinger Band. And we can say this one, and as you can see, it added the Bollinger Band to our chart. It will adapt based on each time frame that we select. Maybe I might show you here. There's a good example of a contraction. As you can see here, you've got the contraction, and you've got the bearish move down. This is a bearish expansion. You've got the upper band that's going in a sharp pull up into the opposite direction as the price is moving, and the candles are moving along the lower band. And here the price starts to move a bit sideways, and as you can see, the top band here is starting to change direction. Since the reason for that is that in this case, these candles are very, very far away from the simple moving average, so the standard deviation is very high. Here we have another example of a bullish expansion with the price skyrocketing up from $4,100 up to $5,000, and the lower band goes in the opposite direction with a sharp move down, and it stops its move down when the price starts going sideways, as you can see here. And yeah, I believe it's a very useful tool. So very often the price always comes back to the simple moving average. So the move downs always correct sideways at some point in time, and the move ups also correct sideways for a certain period of time before maybe correcting. It depends of the overall sentiment of the market. If it's a continuous downtrend, then very often the trend will continue before there's a reversal on a very high time frame like the daily and so on. So that was it for the Bollinger Bands. Hope you liked this video, and catch you on the next one. Bye bye.